If you're anything like me, you probably weren't given a whole lot of direction in your career or in school on how to invest your money other than the advice of contribute to a 401k. In today's video, I want to cover what alternative assets are and why I believe they're vital for you to consider in your investing strategy. First off, I want to provide the disclaimer that this is not financial advice or shouldn't be taken as financial advice. These are simply my opinions that I'm sharing and for education purposes only. Now that we took care of that, alternative asset investing isn't a very familiar topic to most people. Traditionally, we're all told to invest in a 401k, do that for 40 years, and then hopefully retire on it one day. The reason that I started this company is because I didn't love the security around that, nor the lack of transparency or control. It felt like I was putting blind faith in something I knew nothing about and would be stuck crossing my fingers. I also figured that I couldn't be the only one that felt that way, and as I started talking to more people, I learned I wasn't alone. So first things first, what are alternative assets? Think of alternative assets as something that sits outside of the stock market. Alternative assets is a broad category, and they're usually more private in nature and can be things like real estate, commodities, private equity, or private debt. And each one of these segments, there can be a ton of variety. For example, with real estate, you could be investing in single-family homes, short-term rentals, self-storage facilities, assisted living, or hotels. And honestly, that's just scratching the surface. Last month, as an example, I invested in a fund that purchases and operates thousands of ATMs across the country. Yes, ATMs, as in those little electronic boxes that dispense money. As an investor, I'll share in the monthly profit that's generated from the ATM fees and receive passive monthly cash flow. So why should you consider options like this? Frankly, there's a lot of reasons, and I won't cover them all in this video, but we'll start with the one I just mentioned, which is cash flow. Remember that not every alternative asset's going to produce cash flow, but many of them will. And one of the humps I couldn't get over with the 401k option is that it provided me no benefit today. It allows me to defer some tax, but nothing substantial. Considering the time value of money, I wanted my returns generated and back in pocket now so that I could capitalize on that return today, rather than waiting decades into the future. The next reason to consider alternatives is the fact that you can invest with people you know, like, and trust who have expertise in their particular niche. I have relationships with all of the people I invest with, which is huge for peace of mind. I get monthly performance updates on our investments, and any questions I need answered are just a phone call away. A third reason to consider is that alternative assets tend to have real, tangible value. They make sense to everyday people like you and me. You can see and touch what you're investing in, and it's just logically very easy to understand why it has value. I can't say the same with a stock portfolio. Markets fluctuate highly based on emotion, even if the fundamentals of that particular company or industry are strong. Take the collapse of Silicon Valley Bank as an example. Because there was so much fear in the banking sector of the economy, every financial institution's stock got crushed as a result, even if that company had a strong balance sheet. On the topic of volatility, a fourth reason is that most alternative investments are also comparatively steady versus the stock market. There will be ups and downs, of course, but these investments are much slower moving. That's because so many retail investors exist in the stock market, about 150 million people. And these investments are accessible at the click of a button, making your portfolio subject to the fear and confidence of everyone around you. And as it relates to investor volume, I learned from Patrick Grimes, who's a very reputable player in the alternative asset space, that the middle class invests only 8% of their net worth into alternatives, while high income earners are closer to 25%, and the ultra wealthy have 50% of their holdings in alternative assets. Last but definitely not least, many alternative investments provide serious tax advantages. There are investment opportunities out there in natural gas and energy, for example, that allow you to write off a large portion of that investment against your ordinary income in the first year. So if you invest $100,000, you could take up to a $75,000 deduction against your earned income the following year. Depending on your tax bracket, that could be 20 to 30K in tax savings alone, which is in addition to the actual returns you're going to generate from the investment. That's all I have for this video, and I hope outlining some of these advantages got you thinking about how you can take control of your financial situation, diversify out of Wall Street, and start generating income today through real valuable assets. See you on the next one.